Hello traders, and welcome back to the Olymp Trade channel. I'm Alex, and if you are new here, remember to like and subscribe for more trading insights. Today, we are delving into something that might sound fancy, the economic calendar. Have you ever been caught off guard by sudden price jumps? Or perhaps you've heard of the economic calendar but aren't sure of how to use it effectively in your trading. Either way, you are in the right place. The economic calendar tells you when key macroeconomic data releases like policy decisions, GDPs, and CPIs are scheduled to take place. But it's not just about date and event. It's about turning raw data into actionable trading insights. Think of it as your trading companion. Just as you wouldn't show up to an important meeting unprepared, you shouldn't enter a trade without first consulting the economic calendar. Whether you're an intraday trader or a long-term investor looking to capitalize on market volatility, the economic calendar can provide valuable insights if you know where to look. So, what exactly makes up the economic calendar? Each entry consists of 6 key components. Time tells you when to be ready depending on your time zone. The country specifies which economy is in focus. Importance indicates the potential impact of the event. Previous value provides context by showing past figures as a point of reference. The forecast value are the predictions made by economists or the market's best guess. And the actual value, which is updated when the data is released. Now, why should you as a trader care about this event? Volatility is a double-edged sword, and the economic calendar keeps you aware of when the market might swing and in which direction. Let's say you trade on stocks. By monitoring both quarterly earnings report and yearly GDP growth rate, you can gauge how each company is performing in the broader economic context. And when you spot an event marked as high importance, it's your cue to pay close attention. For instance, when oil prices are announced, it not only affects the energy sector, but also currencies of oil-dependent nations. Similarly, a positive US employment data or GDP data tends to strengthen the USD. And if you are watching currency pairs like the Euro USD or GBP USD, you can anticipate potential movement 5 minutes before the data release and 5 minutes after the data release. And if the actual value surpasses the forecast value, the USD may strengthen. So consider going short on these pairs because the market often reacts to these data releases, allowing you to position yourself to capitalize on an inevitable pullback. However, a word of caution. Trading with a calendar is much about preparation as execution. Knowing when major events are scheduled will help you protect your positions or adapt your strategy according to the upcoming news. The economic calendar is a powerful tool, but not a crystal ball. Always complement it with other research, technical analysis, and most importantly, your own judgment. Consider checking out the earnings calendar as well. It's similar to the economic calendar, but focuses on the release schedule of companies' quarterly earnings reports. If you trade on stocks, consulting the earnings calendar is absolutely essential. Olymp Trade also has a quarterly exclusive signals club that you can join to get push notifications with trading signals during the earnings season. I know this might seem overwhelming, but as with anything, practice makes perfect. So start small, monitor events, and observe market reactions. You can stay informed by enabling notifications on your Olymp Trade account and following our social media channels for up-to-date signals on important releases. If you found this video helpful, don't forget to hit the like button and subscribe to our channel for more valuable content. Feel free to drop your questions in the comment section below, and thanks for tuning in.